Hi, and welcome back to Kingdom Wealth Creators. If you are here for the first time, please do remember to subscribe to this channel so that you can keep yourself updated on the Indian stock market, especially if you are interested in making value investments using technical chart analysis. I have a strategy that really works for me, and I'm more than willing to share that on my channel as well as personally whenever you feel you need it. So please do get in touch with me if you want to learn it personally. But more than that, also remember to subscribe to the channel and hit that bell notification for future updates. All right. So basically, last week was a bit of a turmoil week. You saw the market actually fall from the top quite a bit, I think about 3%. And most of this was driven by the HDFC Bank results. Now, the results themselves were not so bad, but I think the market sentiment was that, hey, we need to book out. And especially from FIIs, they sold HDFC Bank massively, about 10-15% fall in just 2 days. And that reflected in the market. And a lot of people were asking me in between, especially people who follow me, as to why I was not selling off a lot of my shares. And I was telling them the logic. And so I'd like to explain that logic here today so that you get a better idea why. Now, for an investor, you should understand that it is critical that you don't, simply sell off because you see a fall in the market. There should be a reason why you sell off. Okay. So what I do normally is in a rising market, if I see that a stock has one particular stock has broken a trend line, based on technical chart analysis, then I would reduce my position in that stock. I won't entirely sell it off all the time. Sometimes I might, but usually I will reduce my position in it. So basically, I'm booking profits a bit. Now, if the market is steadily falling, that means there is pressure from up high, and there is a potential that the market will go into a correction, and then again I will sell off more stocks, especially if it breaks down important levels. Which brings me to the question of 21,500. Last week, I mentioned that 21,500 is a strong support, and if it breaks, then probably we'll look at selling more of our investments. And it did break last week. So when it broke 21,500, the immediate thought process is not to sell up, close all your stocks. Okay. The immediate thought is to see if that support will hold on a closing basis. On the day that it fell below 21,500, it went down to 21,295 in a matter of few minutes. And from there, in the morning itself, there was a strong rebound. It reached almost 21,500 and then it closed at 21,480 or so. Now that tells me that the immediate, and I did mention this in my group. I told people, hey, I'm relaxed. I'm not closing out all my positions unless there is a technical breakdown in a particular stock, because as long as that 21,295 doesn't break, so that's the fresh low. If it doesn't break, we're good. And you would probably know the next day the market gapped up. It went about 21,500, closed about 21,500. On Saturday, we had a very minimal trading volume day. And so I wouldn't factor Saturday too much in. Monday was a holiday. And so Saturday which was supposed to be a testing day of 2 sessions of 1 hour each, turned out to be an entirely full day. So I think it wiped out a lot of people's holiday expectations because of sudden change. But that's the stock market. Sometimes you have these. So I think that's important. The reasoning why I held on to my investments, even when it initially broke 21,500, is simply because it went down to 21,300 or so, took support from there, closed back almost to 21,500. Next day it gapped. And so unless it breaks now 21,300 again and closes below that, I don't think there's a huge rush to sell off a lot of stocks. But I will look for technical breakdowns in particular stocks and reduce positions. At the same time, I have been taking long positions as well. So let me first quickly give you a glance of the where the Nifty itself is, and then we'll take a look at what I plan to do. So if you look at this, you will notice something. Okay, last week on Monday, the Nifty made a top of 22,115. Then on Tuesday, it made a top of 22,124, so a higher top. But from there, it broke down a bit. Then because of HDFC Bank's results and some global scenario, the market fell. It fell by a huge amount. It ended up closing at 21. That was a fall of almost 550, 520, right? And the next day, which was Thursday, you can see here that the low was 21,285, right? Uh, but the point is, if you see the price action on that day, I'll just quickly get this price action for you. Okay, so you see this. This is the price action for Thursday, right? So the first it it fell, it opened gap down. It closed at 21,600 the other day, or 21,595 or something like that. And then it gapped down to almost 21,285 in the first hour. In fact, in the first 30 minutes. But then what you see is that after that close, the next candle or 1 hour candle was above, closing above that, it broke even the top of that candle. That tells me that, hey, we've more or less found a bottom. Now, the interesting part of this candle was that it even closed above the previous low, which was on Wednesday, the previous Wednesday. So you see a lot of signs that this is bullishness, or that the bottom was kind of found. And then on Friday, again, you saw a continuation of that move, and you saw a closing above even the previous close on Wednesday. Okay, so on 17th, it closed around 21,600, fell down to 21,285. On Thursday, it closed to about 21, just close to 21,500 on Thursday. But then on Friday, it closed above that mark of this Wednesday. So again, it showed that the market was rebounding. Now, unless it breaks down here, 21,285 again, I think we're good to hold. Right? So that's the basic concept of how the market is looking like. And let's look at a couple of stocks that I'm accumulating right now. I think it's really important to note that during that entire fall, I practically didn't book any profit because the knee-jerk correction here was not a correction; it was just a quick profit selling. So what happens? You will notice is that when such a fall happens, the share prices might correct very quickly and then rebound just as quickly. So, as an investor, the cost of exiting and entering again is your transactional cost, and that's something. And then there's also the opportunity cost because you might not be able to get in back at less or the same price that you exited up. So, it's really important to note that, understand that, and not panic sell, right? That's one thing. In the panic sell, I entered other stocks while the market was selling off. And that's another thing that a good value investor would do. When you see the market falling very quickly like this or a correction happening, you can see if there is any stock that is holding strong price action wise and probably enter fresh positions in that. And I did a few of those as well. All right. So a couple of stocks that I want to quickly take a look at, and I will guide you through that. But first, I want to show you my portfolio. One, before the fall on Monday, my profit was at about 18 lakhs. On Thursday, when it fell, it came to about 15 lakhs. So that was a loss of 3 lakhs in just 3 trading days, right? But from there, you can see that even though the market is still 600 points away from that top on Monday and Tuesday, my portfolio is just 1 lakh, or not even less than a lakh off. It was 17.8 or 9 at that on that day on Monday, and it's almost back to that same level. So you should understand that there is an opportunity cost that comes with always exiting when you see a correction. Because if the correction finds a base and rebounds quickly, you might not be able to enter those stocks. Okay. Some other things to note. One, Irida has become my latest multi-bagger in I think less than 40 days or so. It's at about 135% return. I initially had about invested about 1 lakh. So I booked off almost 70% of my initial investment in that. But that's my latest multi-bagger. Another important stock that I'd like to point out is NBCC. Now both of these are public owned companies, PSUs, and that is public sector companies, right? So one of the reasons we've seen is a huge jump in public sector holdings or public sector stocks, and that is simply because of the latest developments regarding the center's plan to increase infrastructure, increase capital spending into power, railways, and all sort of things. And that is why you see public sector companies going up really high or quickly. Okay, so both of those have entered my multi-bagger list. I think above 100% now. I have quite a few. Another one that I want to point out is Creative, which is my long-term holding. I've mentioned this to people that follow me. I initially took this when it was 420. I'm planning to hold this company. It's a really good company, and today it's given me a 100% return. And this is an investment that's done maybe 4 or 5 months back, and so you can see how even long term can be planned well and taken properly and really benefit even in the short term, right? So a couple of stocks I really want to talk about. I think this is important, right? One is LIC. Now you can see here that LIC, I think the IPO was at about 940, if I'm not mistaken. And back then LIC opened at that price, and it fell, it fell, right? A lot of people were left who bought LIC, not just for the IPO, but on the opening day. They were all, kind of holding this for so long, making a loss. Today, LIC is above that entry price. In fact, it's just close to, I think, the IPO price. Okay, 940, I think, was the IPO price. So it's very close to the IPO price. Now, the standard play for most people here would be that they would make an entry here itself. Okay, but what you got to do is why price action is so important is to understand a price action. There's a reason why we take it accordingly and enter. You can see here, my initial entry into LIC was when it broke out from here. Okay, so I made an entry about 640-ish. In fact, if I take LIC, you see that my entry was 654 was my average. Okay, I've entered and a bit. Okay, so I started making entries here. Okay, 650. Now, why did I take it here? Because for one thing, it was holding the support. Now, the funny part is that later during the year, it actually broke down that support, but it didn't break 600. The moment I noticed it didn't break 600, that was a strong support. I knew that as long as it didn't break 600, it's good to hold. Today, from that base of 600, which was basically 2 months back, now about to take out its IPO price. Okay. So people who held from here are okay. But people who have done price action or follow technical chart analysis and were able to make an entry somewhere where I took it, or even better, if they took the entry here, 658. Okay, same price as I did, but they probably did it maybe like 2 months, 3 months later. But if you see this candle is where you can see a huge spike in volume. This week, that was the week of November 20th, my birthday week. And from that moment, it's gone up. So it is important to note that if you had taken price action wise, rather than just simply going with the IPO, you could make a huge difference. Today, I'm sitting at about, I have booked some of this already, at about 40% return on LIC. Okay. And remember, LIC is probably the fifth or the sixth largest market capitalized stock in the stock market. And to see a 40% return on one of the largest stocks in the market is amazing, right? So that is why price action is so important. Okay. Another stock that I want to talk to you about is I've already talked about IRIDA, NBCC, and Creative, right? I just want to quickly show you Creative's price chart. This is Creative's price chart, right? Now, why I took it back then was because it broke out from this level. So my average price is worked out to 423, and that's here, basically at this level. So when it broke out from here, you can see this is basically around 350, 360 was the lowest point it went during this year, right? And so I picked close to the bottom, again using technical chart analysis. And today, by the price action, this is where it is. Okay, and if I were to draw a connective line here for long term, I can see that as long as it doesn't break this trend line, we're good. Okay. But look at the move. It's taken out its previous all-time high. It's 100% return. I took this in May, so now it's about 6 months, 7 months, and so you can see the return. Okay, this again this is my long-term holding. It's not short-term, but you can see how within 6 or 7 months it's gone up 100%, right? Now, another thing that I would like to talk about is that when a stock which is fundamentally strong would suddenly react or correct, okay, and I have examples of this, Adani, I've done it before. A lot of stocks I've done it like that. For Geo Finance is another one. But look at the latest one in my investments. Okay, I've taken a holding in POLYCAB. Now the thing with POLYCAB was because of that news that came out. There was a huge sharp fall, right? From it had gone up to 5,600, but on that day, from 5,400 or so, it fell all the way to 3,800, 3,801. Okay. So initially, I actually thought of taking it at 3,810 or so. I actually didn't buy it then. But what I did is once I'll show you what made me buy it. Okay. That helped you. Okay, this is just price action. You can see why. I'll tell you why I made this. Okay. Now, that day, the first candle was an amazingly big candle, right? It attracted a lot of people. Um, so here's the candle. Okay. Now, this was at 9:30. This was at 9:45. This was the candle at 10 o'clock. Okay. Let me zoom this in a bit. Okay. So this was the candle at 10, right? Now, this candle, you can see that the high of the candle is about 3977. So when it broke, this candle was the low, and when it held this candle, I started making my entry. Okay, and so over the next few that day itself. Okay, so this was the day's price action, by the way. See here that so this was the day's price action. Okay. Uh, so what I did is when it broke this high, I made my initial one entry. But I didn't make an entire entry immediately. Okay, I kept accumulating. So every time it came down to this level, 3,900, 3,800, as long as it was not taking out 3,800, it was good. So I kept accumulating that entire day, about 3 lakhs of investment into that. And today it's sitting at about 10% return. Now, why is this important? Fundamentally strong stocks driven by bad news, going down a lot. That day it fell about 20%. And then if you use price action and you have an exit point. There is no, it's not like there's no exit strategy. 3,800, you can exit out if you want. But you can see how as long as it kept holding that price action, it's good. And what's the end result? Polycab is a stock that I've been wanting to enter for a long time, and unfortunately not able to, simply because it's always on the uptrend. Okay, so from July onwards, if you see, from about 3,500 level, it went to 5,600. Now that's a tough way to make an entry. But look at this, 3,500, 700 levels is where it came down to on that day. And now we can make an entry, which is what I did. And it's fine. Of course, there will be sometimes, some more corrections here. It's possible it might fall, break down this level. But at least we've got a good entry based on technical chart analysis, a good stock that fell on bad news. And if it breaks down this level, can exit and re-enter again if needed. But basically, by making that sharp, quick, move based on the analysis, you are making a good investment for the long term. So basically, this is what I want to talk about. Good value investments are easy to make. It's not that you need rocket science to understand this. All you got to understand is how to make these investments using technical chart analysis. So if you're interested, please do contact me on WhatsApp. I'd be more than willing to share my knowledge and help you to make your investments better. So thank you for watching. Thank you for learning. Hope to see you grow in your investment journey. Good luck.